XEG has been my favorite energy ETF hands down. Today we will find out why. Holy banana bread, let's do this! If you've been following the channel over the last year, you should be familiar with XEG and all the times it has made me, well, very excited. This is an ETF that I have been a huge fan of for some time, and it only seems fitting that I do a deep dive to see if it is all that, or if I need to readjust my love for this stock. Before we count our energy profits, tell me in the comments if you have any energy ETFs. I am always grateful when you drop in on the home of free financial content on YouTube. While you are here, please subscribe, as you don't want to miss a single moment. And a huge thank you for that click. BlackRock is one of Canada's more well-known ETF managers. They are based out of Toronto, though they have more than 100 employees spread across the country. As a whole, the company has more than $275 billion in assets under management. They have been a big player for a long time. In fact, their first ETF product hit the market, well, way back in 2000. Currently, they have 161 different ETFs to choose from. They also have some mutual funds, but we're not going to talk about those today. Of course, today we are only thinking about one of them, and that is XEG. So, XEG is the ticker for the iShares S&P TSX Capped Energy Index ETF. This ETF is designed to give you an exposure to companies within the Canadian energy sector and at the same time provide long-term capital growth by replicating the performance of the S&P TSX Capped Energy Index. The ETF currently has 28 holdings, and their top 5 holdings include Canadian National Resources, Suncor Energy, Cenovus Energy, Tourmaline Oil Corporation, and Imperial Oil Limited. These top 5 holdings make up 73.1% weighting in the fund. These are some very solid companies. Of course, knowing about the company is nice, but we are here for the numbers. Let's see what the math has to tell us about XEG. When it comes to the surface data, XEG has net assets of $2.27 billion. They also have a beta of 1.09, so they are pretty much in line with the market average. They do have a management fee of 0.55% and a management expense ratio of 0.60%. Their net asset value, or NAV, comes in at 16.84. We have not used NAV before, but you will see the statistic with ETFs and mutual funds. In a nutshell, the NAV is the net asset minus liabilities, all divided by the number of outstanding shares. This number basically gives you a per share value for the fund. NAV can sometimes be situationally useful when trading. For example, if the market price is higher than the NAV, it is a good indication that investors are willing to buy at a premium because they are bullish on that price. If it is lower, then we have the bearish version of that. With this ETF, we do not have an EPS to worry about. We do, though, have a price to earnings ratio of 3.10. This is not bad, as the Canadian capital markets average comes in at 11. Their price to book ratio comes in at 1.1, which is stellar, as they are only 1.1 times over their book value. We do, of course, need to ask, what is XEG's fair price? The folks over at simplywall.st have used a discounted cash flow model to peg it at $18.53 compared to their $16.83 at the time of recording. This places them at 9.2% undervalued. I absolutely think this is accurate, and if their price history is an indication, this may even be an understatement. Their historical annual earnings growth comes in at a staggering 59.4%. We will break some of that down in just a moment. Let's jump right into those returns. XEG does have a dividend. Their yield comes in at 3.34%, which is paid out quarterly in the amount of 22.2 cents per share. When it comes to growth, in 2021, their share price rose from $5.87 to $10.83 for an ROI of 84.50%. And then once you add in those dividends, a total return of 87.84%. Holy friggin' banana bread, that is not too shabby. Now, jumping to this year, they rose the price even more to $17.06 at the time of recording. This translates into an ROI so far this year of 57.53%, which is still way beyond respectable. This is an ETF that simply gives it all. So, that is all fine and dandy, but what about their debt? Their total debt comes in at $0, and then they have $2.171 billion in assets. This, needless to say, means they have a debt to equity ratio of 0. Putting this into context, though, a lot of of managed funds do not have very much debt, as their infrastructure is, well, minimal. Surely they must have some liabilities. Well, yes, of course they do. They have $44.99 million in short-term liabilities, compared, of course, to their $2.22 billion in short-term assets. They have no long-term liabilities. When we look at XEG, debt is not even a consideration for this ETF, and that only makes the other core fundamentals shine perhaps a little bit brighter. So what is the final verdict? This is an ETF I was in love with coming into this deep dive, and holy banana bread, I may just have to put a ring on it. In all seriousness, this ETF is amazing, and I honestly have no complaints other than it would be nice to see the yield a wee bit higher, but even then, as a total return investor, this is getting close to being an ideal selection. As much as I love this stock, you should still do your own due diligence and decide, based on that research, if this is a fit for you. It is a fit for me, and I will continue to gush about this little superstar. The fun does not have to end here. Check out my video on energy sector profits that I will link on the left. Otherwise, check out the video on the right that YouTube thinks you will like, maybe a little bit more, maybe not. Your click will decide who was right, and I will see you in the next video.